Nvidia earnings coming out after the bell tomorrow is expected to move the market cap about $292 billion up or down, which is the largest implied move in the history of markets. Nvidia earnings are actually implying a larger move for the S&P 500 than the Fed, than Apple earnings, than CPI, basically any other catalyst. This is the biggest catalyst of the last at least 3 months. Well, to say people are optimistic is really an understatement. Nvidia is up almost 3.5% today, following some good news, but we'll get to that in just a moment. This will be the last video posted on this channel before Nvidia reports earnings tomorrow. And you guys have spoken in this poll that I ran on the channel. It says Nvidia will be on the top and bottom line and guide higher, with the stock up 10%. 37% of you guys agree that's what you expect. Be on the top and bottom line and disappoint on guidance, with the stock down 10%. Surprisingly, 25% of you guys voted for that. And then Nvidia will miss, with the stock down 20%. This is really surprising. 13% of you guys chose that option. In fact, if you add the 25 and the 13% together, you're sitting at 38% of you guys expect Nvidia will disappoint in some way, whether that's 20% or the stock will fall 10%. That's actually more of you guys that think Nvidia will miss than think the stock's gonna do very well. 38% versus 37%. And then 25% of you guys say, I have no idea. That's actually shocking, because the markets don't see it the same way that you guys do. This article from the Wall Street Journal says traders are making bullish bets on Nvidia ahead of earnings. And here's a breakdown of the call and put activity over the last 10 trading days through November 15th. You can see pretty consistently 56 to 75% or 78% of the option activity being calls. Some days as low as 22% of the option activity being puts. Although here today it does look like via Ortex the positive order value is a little bit lower today. You have 254 different trades totaling $186.33 million with a positive order value of 62%. But the volume is strong to the call side. Call side 66.14% of volume is calls, and 33.86% of volume is puts, which is pretty much in line with what you normally see for Nvidia. That positive order value is a little bit lower than where it usually is. In fact, the market is anticipating Nvidia's stock price movement with $500 billion in stock option bets. You can see this is almost double the amount of option activity in Tesla in recent days. This article here is titled Why Nvidia Earnings May Trigger Massive S&P 500 Volatility, but we'll look at this in just a moment. First up, there's two big news stories today that are causing Nvidia to go up over 3.5%. First and foremost, Wells Fargo says Nvidia's Blackwell GPUs in full production and progressing smoothly. Nvidia is set to report fiscal third quarter results tomorrow after the close of trading, but the company gave an update yesterday on its Blackwell line of GPUs, which appear to be progressing smoothly, Wells Fargo said. They say, quote, Nvidia specifically called out Foxconn's production ramp in US, Mexico, and Taiwan, leveraging Nvidia Omniverse for 3D factory design in order to stand up capacity as quickly as possible. Analyst Aaron Rakers wrote in a note to clients, adding that Foxconn said last week it expects to take a 40% share in Nvidia's GB200 NVL rack scale solution. Quote, in short, Nvidia's presentation outlined the company's continually deepening software capabilities that span broad industry verticals and application domains. Nvidia highlighted that it now has 5.4 million Nvidia developers, 4,000 accelerated applications, and over 400 CUDA X libraries, and has seen over 62 million cumulative CUDA downloads. So basically, long story short, Wells Fargo says And Blackwell's GPUs are progressing smoothly. And that has been the news in recent days that has shaken a little bit of confidence in Nvidia. But it's interesting that Stein said in a recent report that Nvidia has dealt with overheating conditions in its GB200 NVL72 systems is, quote, likely real, despite pushback from some in the investment community. Quote, conversations with our industry contacts don't precisely corroborate this latest data point, but they do reflect supply chain challenges around the production ramp. So Stein says there are challenges around the production ramp. Wells Fargo says things are ramping smoothly. Who do you believe? I don't know. Now, the second biggest piece of news today is Truist. They raised their price target from $148 to $167 and reiterated their buy rating. They say, quote, we expect Nvidia will deliver upside versus consensus in its Q3 October results and Q4 January guidance. Acknowledge technical challenges in the GB200 NVL72 configuration, express confidence in full year 2025, owning to very robust backlog, and focus on the next drivers of growth after LLMs, data processing, and physical AI. This is actually from William Stein, which is the same guy that says there is issues with the production ramp, which is very different from, again, what Wells Fargo said today. So very mixed info that we're hearing. It seems like Wall Street definitely took Wells Fargo's information as maybe more credible and focused on that a little bit more. Now, here's the crazy part. Nvidia is expected to earn 75 cents per share on $33.12 billion in revenue for the coming quarter, though the buy side is expecting $34.5 billion in revenue, Stein added, citing a Truist survey. Revenue guidance for the coming quarter is expected to be $37 billion, while the buy side is forecasting between $38 and $40 billion. So even if Nvidia beats guidance, as some people think by $2 billion, and they guide for like $39 billion for next quarter, it's still going to be lower than some people expect. The long story short, the expectations are sky high for Nvidia. As I've said in prior videos, other companies, they had the luxury of their estimates going down into their quarterly results. Like the last month or so, right before these companies reported earnings, estimates and expectations plummeted, okay? That's why Google just handsomely beat all the estimates, because the estimates fell into their earnings, right? Nvidia's the opposite. Estimates are rising into earnings, which is going to make any number we get from Nvidia seem less impressive compared to perhaps other companies. And that's just wild to look at these numbers again. If Nvidia posts $33.12 billion in revenue, you're expecting guidance for the next quarter at $37 billion. That's $4 billion higher. But on the high side, you're expecting revenue to grow $7 billion in Q4, which is going to be hard for Nvidia to impress at that point. And I do think the overall risk to reward is not as favorable following today's almost 4% rally with Nvidia. Let's say Nvidia were to fall 4% today, the risk reward would be a lot better, but it's just not following today's rise. As I said earlier in this video, option markets are implying an 8.5% move up or down for Nvidia following their earnings. That is $292 billion change in market cap value. Susquehanna Financial Group says that while Nvidia's actual post-earnings price swings have often undermet market expectations, larger than expected movements have usually skewed higher, according to Matt Amberson, Orat's founder. Strategist Christopher Jacobson of Susquehanna Financial Group also pointed out a larger chance of an upward surprise. Now, this is wild. As you guys already know, Nvidia has accounted for about 20% of the S&P 500's total returns, according to Bank of America's derivative analyst Gonzalo Aces. He says, quote, it remains the most dominant stock in the market, expected to drive nearly 25% of the S&P 500's EPS growth in Q3. That's a wild number. We've never seen another stock have that kind of dominance over markets. But this is wild, okay? S&P 500 implied move is higher than inflation or jobs data. The options market implies a potential 1.05% move in the S&P 500, higher than what traders expect from next month's non-farm payrolls data, consumer price index or CPI report, and in line with the Federal Reserve's December meeting. Options are assigning a more broad market risk around Nvidia earnings than around next month's NFP and CPI days, as well as much as the December FOMC, the analyst noted. And in this article, it reports, so the way that you actually can calculate this is you add the call premium and the put premium at the money with the Friday's expiration, or the next closest expiration. On the call side, the at the money call is $575. The put side is $565. So as expected, the calls are a little bit more expensive. That gives you a total of $11.40 that is priced in. Go ahead and divide this by $145.46, the current share price of Nvidia, and you're actually implying almost an 8% move. So it's actually not as high now as what was expected earlier in the day today. Now, if you wanted to use the options that are barely in the money, like the 145 call and the 145 put, or the 146 put, that would still give you an implied move of about 8.5%. So perhaps that's what some of these firms are doing. I like to use the right at the money, not contracts that are already in the money. So that is implying an 8.5% move. Either way, that's a big move if we get that from Nvidia. Now, I'll tell you why I'm a little concerned here, okay? I'm concerned because everyone's bullish, number one. I mean, if you look at the options market, everyone's bullish on Nvidia, which rightfully so. Nvidia is a fantastic company. They've done well every single earnings, but I don't like how expectations have been raised so far ahead of this quarter. Even if Nvidia comes out and they beat by $1 billion, it's not going to look as good because they normally beat by $2 billion, but they would have likely beat by $2 or $3 billion if they reported earnings 2 weeks ago before estimates have been risen, right? So the same number is going to be looked at a little bit worse because expectations have been risen. Same is true with forward-looking guidance. Again, to really surpass everyone's expectations on forward guidance, especially on the buy side, Nvidia needs to guide $7 billion higher than the estimate that they have for Q3, right? They need to guide for over $40 billion of revenue for Q4. That's just not set up in a favorable way on a risk to reward profile. So from my personal, experience or even expectations, you could say, Nvidia is not going to miss. The beat, though, is just not going to look as good as it has in prior quarters. Now, from a more structural perspective as well, yes, Nvidia dominates the semiconductor, specifically generative AI market, but there are other forms of competition coming. And AMD's new chips, they're priced between $10,000 and $15,000, less than half of what Nvidia's are priced at. And that could create some pressure for Nvidia, especially if Blackwell has these new added requirements to keep them from overheating. Some customers may start to opt for those cheaper chips, especially if there's no urgent rush to have your hands on the Blackwells, right? Which I don't think there is from a product standpoint. We really don't have any AI products out there today. So I think that's an issue for pricing, okay? Think about it like this. If Nvidia's pricing comes back to its MSRP price or falls even a little bit, the Hopper, the H100, H200 chips, they're MSRP'd at around $8,000 to $15,000, similar to an AMD chip. They're selling at $30,000 to $40,000 because there's been so much demand for those. If Blackwell does come out as expected and production does ramp, you would expect the H100s, H200s to fall in price, wouldn't you? Well, you would have to sell more of the H100s, H200s to offset a lower price for those chips just to meet, or continue your revenue at the same pace, let alone grow your revenue, there's really no margin of error for a decompression in pricing. I think that's the issue. If we do get a full year guide for 2025, which we probably should this quarter, it may not be as good as people think, given how strong this last year has been for Nvidia and the assumable price compression that we could see in the H100s and H200s. Again, I'm really not worried about Nvidia's quarter that we're being reported on. That doesn't even matter. The only thing that matters for Nvidia, what's going to send the stock higher or not, is if next quarter and next year is projected to be much better than the current year that we're in, with margins holding up and pricing holding up and demand holding up. There is a lot of variables there that need to go perfect or Nvidia will get punished, okay? That's the fact of the matter. And I'm a little concerned about that forward guidance, especially if we get 2025 revenue guidance for, 2025 out tomorrow. That's where I think the issue could arise. Now, from a more, a good problem equals bad problem perspective, Nvidia's just grown so large, the growth rate is slowing down and will continue to slow down. You're expecting 82+% year-over-year growth for this quarter that we're getting reported. Next quarter is not going to be that strong unless we get some kind of crazy guidance, which looks unlikely to a certain extent. Like, are we going to get a 45 billion guidance number tomorrow? If that happens, Nvidia's going up 20%. But is that likely? Probably not. So I don't know. Honestly, I was hoping Nvidia sold off today to create a better risk reward profile, because I don't want Nvidia to fall in any kind of meaningful way. I mean, that kind of hurts the whole AI story. That hurts Tesla. That hurts, all the stocks that we likely invest in if they are AI players, right? I don't want those stocks to do poorly. I don't want the markets to go through a correction unnecessarily, right? I think that'll come. I think there will be a growth scare. We'll get a correction that way. But I do see the risk as being more towards a disappointment than a blowout based on where expectations are. Let's be honest. It's going to be a blowout. It's going to be a good blowout. But the expectations are that you're going to have something that's just jaw-dropping based on the numbers that we went over here in this video. And anything less than that is not going to be good. Nvidia is absolutely 100% priced for perfection. Any issue, any misstep will be punished. It will be a sell first, ask questions later. And that's not a good position to be in, especially when you do have more competition coming online, especially from AMD. So margins, pricing, competition. We should also mention tariffs. That's going to be important to get some color and clarity on the earnings call. These are all potential risk factors for AMD. And then just the outright full year guidance for 2025. If that does not come in as good as expected either, if Nvidia implies their growth rate will slow down, which is almost a certainty, Wall Street typically does not like growth rates slowing down for any reason. Whether that is because you've grown so large and your business has done so well that naturally the growth rate slows down, or whether you have a misstep in the business. No matter what, Wall Street does not like when growth rates slow down for any reason. And at this point, Nvidia is a $3.5 trillion company. Guys, if the stock goes up another 20%, I mean, you're looking at a crazy amount of market cap value that will be added to that. You'd add $700 billion in market cap value. That is insane. And I think just some people are way too optimistic. That would put Nvidia at a $4.2 trillion valuation. That, I have a hard time wrapping my mind around that. I just do. I don't know. So I'm not super optimistic from that perspective. Let me know what you think about this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.